President Trump's tariff slump continues to rattle markets. We've seen dives and volatility rivaling the last two big crashes over COVID and the housing bubble. Trump now clashing with the Fed chair, who gave him low grades for the tariff problems that Trump caused. And now there's a more stark comparison to America's Great Depression itself. The long lines, the run on the banks, that crash upended the economy and our society for years, driven by several factors, including failed tariffs. Now, if that comparison, if these visuals tonight seem almost too extreme to compare to the risks posed by the current market chaos, if the comparison of the food lines seems almost unfair to this administration, that comparison is based on monthly market data. This isn't like politics where words or comparisons are just sort of thrown about. After Trump's tariff debacle, the Dow is now actually headed for one of its worst monthly comparisons since 1932. It's just a mathematical comparison. As the headlines are putting it today, Dow headed for worst April since 1932, investors sending no confidence signal, a signal against Trump's policies and handling of the volatility he caused with what has been a failing trade war so far. Those mathematically driven headlines appear in many places, including the Wall Street Journal, which is, of course, the sister outlet to Fox News, owned by Rupert Murdoch. So whatever you think of the Depression comparison month by month, the bottom line is that's how the Wall Street Journal puts the headline. No one can accuse them or their owner, Murdoch, memory played in the show Succession, as some kind of anti-capitalist or anti-Republican political figure, or really sentimental in general. So our lead here is not that we are definitely heading for the Great Depression itself. We all hope not, and I'll return to that word hope. But our top story is that even the Journal and these bankers and the data itself and a lot of other indicators show this is the fallout now from Trump's losing trade gamble. And today we got even more flashing red signals for the economy.
It's the worst start to a year ever and easily the worst start to a new presidential term.
At 63 trading days since Inauguration Day, the S&P 500 has fallen by 14%, which is the worst start to a presidential term in the index's history, dating back to 1928.
This morning, another flashing red warning light.
The IMF's chief economist now projecting a 40% chance of a recession due to President Trump's tariffs.
The president is looking for a scapegoat. As it appears more and more likely that the economy is headed for a downturn, he seems to have found that scapegoat in Jay Powell.
How are we doing with tariffs? He keeps saying we're making so much money with tariffs. Okay, Mr. President, how much is so much? Give the markets something to chew on. Right now, the market's listless, it's worried, and it doesn't have anything to chew on.
Well, the markets have been chewing, but mostly chewing on a bunch of discouraging signs from the Trump White House as the president improvises those trade rules and the tariff numbers for different countries, then rolled them back, then made new threats, all of it adding uncertainty to the markets and undercutting the basic trust in the U.S. government's policy consistency and its literal global credit. Any buzz over Trump's inauguration did fade quickly, we can now see in the markets. Stocks down, prices up, tons of volatility and risk. You could take the Dow. Since inauguration, the index fell by a sizable 11% and then is up today. As we approach 100 days, Trump is not just doing worse than the president he replaced. After debates and a campaign that often fixated on post-COVID inflation in the Biden era, Trump is overseeing the worst start for America's largest companies since the Depression era. The footage I showed you. Again, the footage comparison is based on the math. I can tell you another article now notes that the top 500 companies' performance since Trump inauguration is the worst also for any president since 1928. That was right before the Great Depression. Down over 12 points in that index, which is trillions of dollars. And numbers don't lie. The numbers are bad, even after Trump retreated on part of his tariffs. Now Trump's aides are trying to calm the markets or add hope by repeating a talking point that the tariff war Trump started will come to an end because it's not sustainable. which is something Trump's Treasury Secretary has been saying and reportedly leaning into again today in this headline that you see, a key private huddle with investors, where he says these China tariffs are unsustainable. They can't be sustained by both sides. Okay. That is a vague statement, but it's just economic speak for saying this will end. Trump's whole big trade war will end because it's not sustainable. It's designed to try to bring things back from the brink. Now, these markets, of course, are made of people who make up their minds. Those people have been leaning into that hope today, and you can see it actually in these headlines. This is supposed to be a numbers game, Bloomberg, Yahoo Finance, but the theme from that Trump aide Bessent is that hope for a China trade deal, hope that they'll back off doing what Trump's been doing. So hope that he'll stop is a negative review for the trade war. They're hoping it ends. They're hoping these Trump policies eventually evaporate because they're not sustainable. But putting that much on hope is also a hint of how desperate things are on Wall Street. People whose careers turn on numbers and computer screens and making deals for an eighth of a point are now, I guess, just fingers crossed, hoping that the politician they cheered on for claimed economic reasons, that he'll kind of go away, at least as far as trade and tariff policy is concerned. Now, I bet you feel, if you follow the news like we do, that we are a long ways from last year's campaign. So a little memory about the shift here, because back then it was Trump and a lot of Wall Street leaders claiming they were on the same page about the market benefits of Trump winning.
It'll also bring your grocery bill way down.
President Trump will do nothing that interferes with the success of the country, the success of the economy.
Nothing to interfere with the success. How's that aging? Poorly. The numbers don't lie. Facing terrible numbers, the Trump bankers are now talking up hope. Those are the new headlines today, which is pretty striking when you think about the track record of that particular word hope in our recent political lexicon. You might remember Obama's hope, which was offered as kind of the idea of a fresh start for more unified politics in our country, immortalized in this hope poster, which is a far cry from what we're hearing on Wall Street today. Again, I'm quoting those finance headlines about hope. Hope not so much for anything positive or affirmative, but just a hope that President Trump will take that tariff chart and go away so the traders can trade again, so the bankers can bank again. Hope for an end to a self-induced fiasco. And by the way, with full awareness for everyone following this and everyone on Wall Street that there's no magic foreign concessions, no actual deals in the 9 days since Trump's top trade advisor, who's hawkish on all this, who supports the trade war, had been vowing deals.
We've got 90 deals in 90 days possibly pending here. And it was par for the course. Actually, it was a birdie for President Trump to do exactly what he did, which was pause for 90 days. And we're going to get this done for the American people.
No trade deals, despite the promises. And that's another number that doesn't lie. 0 deals to show for the chaos and the trillions lost and the public proclamations of so many, even if it was quite clearly at the time trying to save face for Donald Trump, that there was some benefit from all of these trillions lost, that there were deals coming. Forget 90, how about 1? Global economics experts view all of this as more than a bad month. We're being told the global economic system of the past 80 years is being reset, according to a chief economist at the IMF, managing the, quote, major negative shock from Trump's chosen tariffs, policies that he chose. We didn't have to go down this road. There's been no consistent counter message on these economic problems by Trump. Have you noticed that? He's, of course, known for his rhetoric, the catchy nicknames he gives out, his approach to PR. But knowing PR also means knowing when not to do PR about certain things, not to do more public relations, say, about tariffs. So in a sign we're seeing that the White House actually knows this economic drop is a messaging brick wall, is how they're trying to change the subject. Aides hammering home messaging about deportations, immigration, Greenland, any issue that could distract from an economy left quaking by Trump's trade war, The Atlantic reports. There's a business commentator, Grant Cardone, who basically pitched a pretty disempowering defense of the Trump economic slump. Remind you, he's talking to viewers and Americans about their own money, whether it's in retirement accounts or wherever. And he told the people, quote, the people at home, just step aside, stay out of the game. I guess the game of even their own lifelong retirement savings. Because he tried to explain the only person in charge was Trump in the game.
You guys that are at home and you're worried about your 401k, your IRA, or you traders out there or bankers that are worried about your commissions, just step aside. This is not the time for Monday, quarterbacking. You're not in the game. President Donald Trump is.
You're not in the game, even for your own savings. We've been through enough boom and bust cycles and cruel capitalism and unfair inflation to know that. We've been all the way back to it's the economy, stupid. Everybody knows you, at the end of the day, are the quarterback of your pocketbook, your rent, your savings, if you have some, your investments, if you have some of those, or retirement investments. And you definitely can't count on this government and this Trump administration to be looking out for you. Not according to the last few weeks, not according to the slump since he took office, and not really according to his own, I guess, defenders who want you to just sit out the game while he continues a game of chicken with China that has cost this economy $6 trillion and counting.